It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ trading very close to session highs right now. S&P up 0.9%, extending its year-to-date gain now to 14.8%. The Dow is very close to session highs, up 0.5%. Right now, we have got the NASDAQ Composite Index up 207, up 1.2%. NASDAQ 100 Index, full of those big tech names, doing a little bit better, up now by 1.4%. The Russell 2000 taking part in the gains as well. Small cap shares up by 0.8%. 10-year 4.27%, with a 2-year right now 4.75%. Gold is retreating 0.7%, 23.17 the ounce, while West Texas Intermediate crude now at 80.12 a barrel, up 2.1%. Bottom line here, we've got several big techs climbing despite a jump in Treasury yields. American Airlines and its flight attendants will be meeting for contract talks tomorrow after making some progress toward an agreement that would avert a walkout in the summer travel season. American among the airlines moving higher today, American up now by 1.1%. Recapping, S&P trading at a record, up 50 now, up 0.9%. S&P on track for its 30th record this year. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, sometimes technology, innovation, and disruption actually involves a company doing just that to itself. Enter Google, home to two elite AI teams, Google Brain and DeepMind, and disrupting that, Tim, by combining it into one AI super unit that it calls Google DeepMind.
Let's get to this Bloomberg Business Week story. You can read it on the Bloomberg and at bloomberg.com/businessweek. With us in the Bloomberg studio is Business Week technology editor Joshua Brustein, who joins us in New York. So Joshua, remind us what these two labs were doing separately and why Alphabet, the parent company of Google, decided to bring them together.
Yeah, so Google has, for about a decade, been pursuing AI in various ways, and it has a history of kind of doing things very far away from trying to make a product out of it, and also actually has a history of having two competing departments trying to do the same thing. So they had a homegrown unit called Google Brain, which came out of Google X, which is its moonshot lab. And they spun that out of X and started working on some AI products that were making into, that were actually ending up in some of the commercial products. And then, I believe in 2014, it acquired a UK-based AI shop called DeepMind, which was working on using AI to beat video games. And this was seen as sort of the foundation for much more ambitious AI projects.
Maybe years ago, people would have heard of DeepMind because it was able to beat a human at Go.
Yeah.
which I think a lot of people, when that happened, they were like, "What's
Wait.
Go?"
Yeah.
Because it's not a very popular game in the U.S.
So
that
many
was certainly
questions.
my reaction to it, but that was
But also
when it
a
first
really
got-
seminal moment in
Exactly.
AI development. Like this was seen as like groundbreaking and sort of scary for a lot of people at the time. Like if AI can do this, what's next?
Well, speaking of seminal moments or important moments, OpenAI's own work, a paper that they were talking about GPT-3, that was back in 2020, a bit of a wake-up call for Alphabet and Google in terms of their own work on AI?
Yeah, absolutely. So what happened was Google had built some of the foundational technologies that went into GPT-3. They built a type of technology called a transformer, which we don't have to go into, but it is the basis
See,
of a
so
lot
many
of...
questions always. But go ahead.
but a basis of a lot of the modern large language models. And Google read what OpenAI was doing in 2020 and realized, oh man, we are building the science here, but someone else is building the products, and that is not where we want to be. And so that kind of kicked off a sort of self-examination to figure out, like, why aren't we doing the things that are actually going to make AI work with consumers out in the world?
So bring us up to speed on where we are today, because I think a lot of people probably saw a few weeks ago when those viral Google search results went around that suggested that people were okay if they were to eat rocks, for example.
Yeah,
Because doctors said that was fine.
exactly.
Explain what happened here.
So about a year ago, Google ended up combining those two labs that we mentioned in an attempt to have a more OpenAI-like process to get stuff out, to really start putting things in front of Google customers. The event you're referring to was from a particular product that would sort of summarize search results in using large language models.
Which everybody who's Googled recently has seen this.
Yeah, absolutely. This was like...
It's the first thing that shows up on the page when you search for something, and it says this is a lab result, it's experimental, but nonetheless, oftentimes it's right.
Yeah, absolutely. They wanted to have some of this. It started showing up. A lot of people think that, chatbots will eventually replace the way that we do Google search. And Google's very worried about that, obviously, because that's where a lot of their revenue comes from. But like all large language model-based products, the Google product had a tendency to hallucinate, which basically just means make stuff up. They started summarizing the web by taking things that were in fact on the internet but were not great ideas. I believe one of them was to eat rocks. Another one was to put glue on your pizza.
Okay.
To be fair, sometimes they were using the onion as the source for this stuff. So.
Do not put glue on your pizza. Do not eat rocks.
But what if the
Although
cheese,
I do have a dog that
But
eats
what if
rocks.
the cheese is falling off, Carol?
Do not
Okay.
put glue on your pizza, okay?
Noted.
Just, use your brain here, everybody. Combining the labs, though, what does Google, Alphabet, I never know which one to choose, but what do they gain by doing that? What might they lose? Because sometimes folks say internally they like to have different units because they kind of compete against each other, and everybody gains, or everybody's smarter because of it. So what do they gain by doing this? What might they lose?
Yeah, so the thing they were hoping to gain was to put everyone who was working on advanced AI within Google and get them pulling in the same direction. And that direction was to not only be pursuing AI projects that might be interesting, but to actually have AI projects that would be products sooner than later.
Yeah.
So that's what they would gain. And they have been releasing products. There have been some hiccups, as we've talked about. That is par for the course in AI, frankly. The thing that they could lose is that Google really has done a lot of the foundational research with AI, and they did that by giving researchers a lot of freedom to kind of pursue what they wanted. They worked on small projects. They weren't given commands from on high, and you get surprising work that way.
Right, and think about
exactly.
really like that free time, right, to kind of figure out what could we maybe do.
Exactly, like the classic Google 20% time is that's always been part of Google's culture, to kind of experiment and do things that we trust will pay off eventually.
Search and advertising, fundamental to Google's business. I mean, make no mistake, this is an advertising company that makes its money from advertising. But if we think beyond what Alphabet is trying to do when it comes to AI, what are the quote-unquote moonshots, for lack of a better term? Like, yes, we understand that it wants to protect its search business, Joshua, but what else does it want to do beyond that?
In AI, you mean?
Yeah.
I think at this point, there's a little bit of lack of clarity throughout the industry of exactly what the AI business is. It's been coming up on 2 years since the release of ChatGPT. We've spent a lot of time talking about chatbots. They are out there in the world. They are being used in various ways, maybe to replace Google search. I think that Google also has some other products and projects that we think about as AI that are not kind of in the discussion about, like ChatGPT. I mean, Waymo, for instance, an enormous AI project. Yeah. Those things are driving around the streets of San Francisco. The DeepMind lab is working on AlphaFold, which does a lot of work that could be really important healthcare work. But right now, like looking for the Google search-sized AI business is not emerged yet. It's not clear. This is where we're going, and we just need to get there.
You talk about that, ultimately Alphabet wants products that are going to pay off for the company, right? That makes sense. They want all of this work to kind of have a payoff, whether it's in, like I said, offerings. Having said that, when they were allowing the two labs, right, they were kind of, offering up certain, computing power. AI takes a lot of computing power, right? And so they kind of had to allocate it too among labs and researchers, right? So there was a little bit, it sounds like almost of competition internally. Like I wonder if that was how that played into it, just the practicality of, hey guys, this is a lot of computing power. So where do we kind of focus our efforts to, get that payoff?
Yeah, that's a good point. I think that this is actually part of getting Google to all pull in the same way.
It's like kind of a grown-up
AI.
Google a little bit.
Yeah, like you had, not only do you have researchers, like 3 researchers doing this, 8 researchers doing this, you have all of this computing power, and to build a model along the scale of a GPT-4 or Gemini, that's Google's model, you need to be using most of your computing power, or at least a whole lot of it, on one thing. And that means having a top-down structure where you say, this is the one thing we want to do. And that's really new compared to how Google had been doing things up until a year ago.
So combining these two labs, Joshua, I know that Mark Bergen and Julia Love, who wrote the story, you edited it, spoke to a lot of folks out there about whether or not it has been successful thus far. What's your read on it?
I think that Google is one of the leading AI companies. They are clearly doing things that keep them in the running. And there are things that the market's very unsettled, the tech is very unsettled. I think an interesting thing actually that's come up with the last year under this is up until around that time, people inside Google were unsatisfied because it wasn't commercializing things quickly enough. There were a lot of researchers who left, even ones who did some of the core technology for Google, saying, I want to go to a startup where we actually get a shipped product. Now Google's shipping product, and there are people inside Google saying, why are we doing this? It was more fun when we could just work on whatever we wanted. So there is a tension here within Google about like, what is it you want to do? And you're always going to think, well, the grass is greener.
Interesting, right? Like, the payoff. I was curious about kind of what the mood was internally. So it sounds like it's a little bit of a mixed bag.
Yeah, it seems like it.
All right, great stuff as always. And this story by our Bloomberg Business Week team. Joshua, thank you so much.
Great,
really appreciate it. Joshua Brustein, he's technology editor at Bloomberg Business Week. You can find this story on the Bloomberg and also at Bloomberg.com.
Hey, stocks are surging right now, Carol. We got the S&P 500 higher by close to a full
AI
percentage
needed. Well, there might be some
now.
AI. Who knows?
The NASDAQ composite is outperforming, up by 1.2%. The Dow Jones Industrial Average higher by 0.6%.
Yeah, pretty impressive. The rally continuing from last week. Coming up, the ranks of double haters are at a historic high. So what impact might that have on the upcoming November U.S. presidential elections? We'll get that story on the other side.
Before we get to that, though, we head from New York City to Washington, D.C. for a check on the latest world and national news. That's where we find Amy Morris in the Bloomberg 99.1 newsroom in D.C. Hey, Amy.
Hi, Tim. NATO says a record of more than 20 allies are now expected to hit the alliance's target for defense spending this year. NATO Secretary General Jens Stoltenberg announced that figure during a talk at the Wilson Center in Washington, D.C. Now, this marks a nearly 4-fold increase from 2021 in the ranks of the 32 NATO member nations meeting the alliance's defense spending guideline. Only 6 nations were meeting the goal that year, ahead of Russian President Vladimir Putin's full-scale invasion of Ukraine. President Biden and Donald Trump made campaign appearances over the past weekend as they look forward to their first broadcast debate just 10 days from now. Terry Haynes is a founder of the Pangea Policy Group, and he tells Bloomberg both men face a skeptical audience.
Biden's got to show pretty much every day between now and November that he's up to the job and that he's the saner, calmer alternative to Trump, but also he's on stage with his major competitor who's going to do everything possible to try to discombobulate him. Trump's biggest test is going to be not going off the rails and coming in too hot.
Haynes says Trump remains relatively weak among independents. And the U.S. Surgeon General is calling on social media to include health warnings for kids. In an op-ed for the New York Times, Dr. Vivek Murthy says there's plenty of evidence social media is linked to significant mental health risks in young people. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ 100 index, all racing higher. S&P on track for its 30th record of 2024. Right to the numbers with the S&P now at 54.83. That is a gain of 1%, up 52 points. Dow Industrials session highs up 223, up 0.6%. NASDAQ now up another 216 points, up 1.2%, extending its year-to-date gain now for the NASDAQ Composite Index to 19.1%. 10-year, 4.26%, with a 2-year now yielding 4.75%. Spot gold down $14 the ounce to $23.18, lower by 0.6%. West Texas Intermediate crude oil up 2.6%, $80.50 for a barrel of WTI. The activist investor Starboard Value says it has built a stake in Autodesk valued at more than $500 million and does plan to push for changes to the board because of concerns about the software company's performance. Autodesk up now by 7.1%. Recapping, on track for more records today. The Dow, the S&P, NASDAQ all higher. S&P right now at a record, up 1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We are up to date on the markets on this Monday. We want to get up to speed on kind of some of the political thing that's out there. We want to talk a little bit about double haters. In the past two presidential elections, they were definitely a thing. Key factors in the outcomes could be again this time around, especially as there are twice as many today as there were this time back in 2020.
Well, let's head to our Washington, D.C. bureau to a Bloomberg News White House and politics reporter, Gregory Cordy, who we find there in our studio. So we got some new analysis from the Pew Center that you write about today, Gregory. What specifically did they look at when they were deciding whether or not to describe these folks as, quote unquote, double haters?
Yeah, the definition of a double hater, and this is a cohort that we are talking increasingly about in this election, is people who say they have a negative opinion of both Donald Trump and Joe Biden. So they don't like either one of them. And that number is now 25%. It's a quarter of the electorate who doesn't like either one of these candidates. And what's remarkable is, as we look at these numbers, is that it's about double as it was even just 4 years ago. We think of 2016 as the previous high water mark of this double hater phenomenon, but this is a relatively new phenomenon in American politics. As recently as 20 years ago, it was very possible to like, say, both George W. Bush and Al Gore, and that's not true anymore. We have an increasingly polarized electorate, where if you like one guy, you hate the other, and increasingly numbers of voters don't like either one.
It's amazing the people you talk to, and they're like, I'm not voting for somebody, I'm voting against somebody, or I just don't kind of want to vote at all. Do haters equally dislike Donald Trump and Joe Biden?
That's really hard to get a handle on, and here's why, is because it's what we call in polling a dynamic crosstab. People will move in and out of this cohort, and almost by definition, once you say that you are going to vote for Trump or Biden, you might be more likely to also say that you like that person. Now, when it comes down into November, that's what's going to be really critical here, is those people who remain double haters into November but are holding their nose and still going to the polls to vote for one or the other. What we do know is that from exit polls is that in 2016, Donald Trump won those double haters, and in 2020, Biden won. So this is a key group of undecided voters that both sides are going to try to move into their camp.
Okay, Gregory, we talked a lot about... Oh, go ahead. Please, go ahead.
No, as Carol suggested, it's going to be mostly through trying to get them to hate the other guy more, right? And that's where we are in politics right now.
Yeah, and we're seeing that as our own Joe Matthew and Kaylee Lyons covered earlier on the program today. We're seeing that with a big ad buy from the Biden administration, the Biden campaign that started today. Gregory, I do want to talk about the third-party candidates here and to what extent these could be the quote-unquote dark horse when it comes to the race here, and if those haters could potentially go to a third-party candidate.
Yeah, so here I'm looking at our Bloomberg News Morning Consult poll of the 7 swing states. These are the 7 states that are most likely to decide this election. And what we see in that in our most recent poll is that about a quarter of the electorate each will, of these double haters, would vote for Trump and Biden. So about 25% Biden, about 22% I think Trump, but then 36% say that if the election were held today, they would vote for Robert F. Kennedy Jr. So, third parties could make some inroads among these voters, which is partly why, in addition to launching negative ads against each other, the Biden and Trump cads are also, those camps are going after Kennedy and trying to get his negatives down and turn these double haters essentially into triple haters.
How many of these double haters just say, I'm out? I'm not even going to the, I'm not even going to pull a lever or whatever. I'm out. I'm not voting.
Yeah, I'm looking at that number, and it's about 17% say they would not vote, compared to 5% of the overall electorate. So that's the other danger here, is that these double haters just stay home because they just can't get excited about any of these candidates.
It's June, Gregory. We got July, we got August, September, October, all coming before that November election.
Now and then.
Well, that's my question. It's not about what could happen. It's about how big of a grain of salt we should take this poll with, and frankly, every other poll out there right now, given that, well, a lot can happen between now and then.
Yeah, Tim, we talk about this every time we talk about polling, right? That there's all sorts of margins of error here. There's statistical error, but there's also the error that just comes from being 5 months out ahead when people aren't necessarily completely tuned in, haven't made a decision. You might have some late deciders. Obviously, we're all looking forward to that June 27th debate in 10 days between Trump and Biden. Kennedy is going to try to get on that stage. It doesn't look like he's going to meet the criteria to do that, but we're going to have an earlier debate than we've had in history, I think, in that June 27th debate. And so that'll give us voters an early look at putting these guys side by side and figuring out which one of these guys they like best.
Yeah, and a very interesting format, too, to say the least. Is there some assumption we can make, and I'm curious about the polling you guys have been working on, Gregory, when it comes to Robert RFK, Robert F. Kennedy, where those double haters who don't like maybe Biden or Obama, but maybe go for RFK.
Biden or Trump.
Biden or Trump, sorry. Whoa, where did I go with that? What would Freud say? But having said that, where those voters might go if they ultimately say, I'm not going to go for RFK?
Yeah, well, remember, there's also Jill Stein on the ballot. There's Cornel West on the ballot. We also have Chase Oliver, which is a name that people might not have heard much about. He was just over Memorial Day weekend nominated as the Libertarian Party candidate. And Libertarians can get 2-3% in any given election. And so he's worth watching as well. He would be more of a threat to Trump. Cornel West and Jill Stein might be more of a threat to Joe Biden. And then really, Kennedy is this sort of Sphinxian riddle, right? Because he is a former Democrat. Great Democratic name, right? His uncle was President of the United States. His dad was the Attorney General, a Democrat, but also has a lot of appeal to Trump voters who are anti-vaccine, anti-establishment. And so that's, again, what we're seeing is Kennedy polling maybe about 10%, maybe less. But who he takes that 10% from might be critical as we get to November.
Gregory, a fundamental question about polling that I have is who turns out in relation to who's actually polled? The whole idea here is we talk to likely voters, but we don't know yet if those folks are going to go to the polls. What have historical polls told us?
Yeah, what I often say about this is that the easy part of polling is calling up a bunch of random people and saying, who are you going to vote for? The hard part of polling is to figure out which of those people you just talked to are actually going to show up. And you can ask them a number of questions to determine that, what pollsters will call a likely voter screen. And it's questions like, do you know where your polling place is? Have you voted before? It really helps if you can verify the voters. You can match the response to an actual voting record and see, okay, this person has voted in previous elections, so pretty sure they will show up again. That past voting behavior is the best predictor of future voting behavior. That still leaves a lot of young voters, new voters, recently moved voters. Still, we're not quite sure whether they're going to show up. And we had this record turnout 4 years ago. Can we sustain that? Can we increase on that, or will people just be a little bit disillusioned by their choices this time and stay home.
We're living in interesting times. Double haters and dynamic crosstabs. But we learned about it all from Gregory Cordy. He's Bloomberg News White House and politics reporter. Hey, still to come. Get ready for that searing heat. Are you ready?
No, I'm not ready, but it's already getting warm out there. It's expected to be felt by nearly 60 million Americans. One more thing. That's next on Business Week.
Your company news headlines on Bloomberg Radio.
On Bloomberg World Headquarters, I'm Charlie Pellet. Coming up after the close of trading, we've got earnings from home builder Lennar and home furnishings retailer La-Z-Boy. Right now, shares of Lennar, they're up 1.2%. La-Z-Boy up by 1%. The Dow, the S&P, NASDAQ at or near session highs. Just over an hour to go ahead of the closing bell. Right now, up 0.9%. Federal Trade Commission suing Adobe, alleging that the software company violated consumer protection laws by making it too difficult for consumers to cancel their subscriptions. The FTC said Adobe pushed users toward annual subscriptions to its creative software, such as Photoshop, without adequately disclosing that canceling in the first year could cost hundreds of dollars. Adobe shares down now by 1.4%. The activist investor Starboard Value says it has built a stake in Autodesk valued at more than $500 million and plans to push for changes to the board because of concerns about the software company's performance and how it handled an accounting probe. Shares of Autodesk right now we've got Autodesk trading higher by just about 7%. EV makers are targeting a $25,000 car for the United States as high-end growth slows. Electric vehicle prices are falling fast in the U.S., but the cheapest models do remain far more costly than what other countries have on offer. Tesla up 5.4% today. Rivian Automotive up by 0.8%. And those are some of the top company stories that we are following for you at this hour. I'm Charlie Pellet, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio and Television.
It is Bloomberg Business Week. Let's get a check on the latest world and national news. We had Amy Morris in the Bloomberg 99.1 Newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. President Biden and Donald Trump made campaign appearances over the weekend as they look forward to their first broadcast debate. Now, polls suggest they're running neck and neck, with Trump ahead in most swing states. But Terry Haynes, the founder of Pangea Policy, says Trump remains relatively weak among independent voters.
Trump's major problems are twofold. Yeah, the Republican Party is split, as you can see from the Haley votes in the primaries, and Trump courting Haley, which legitimizes my point, and that he's not doing that great against or with independents. He needs to do both, consolidate the Republican Party, appeal to more independents in order to have a good chance to win.
Terry Haynes is founder of Pangea Policy Group. The debate is set for June 27th. President Biden's re-election campaign is kicking off a $50 million June advertising blitz targeting minority voters in battleground states ahead of his debate with Donald Trump next week. The new ad is called Character Matters, and it cites the former president's criminal conviction.
This election is between a convicted criminal who's only out for himself and a president who's fighting for your family.
President Biden and Donald Trump are scheduled to face off June 27th. It is their first televised debate of the 2024 cycle. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris. Now back to Bloomberg Business Week with Carol Masser and Tim Stenivek.
All right, Nancy.
Amy's back. Welcome back, Amy.
Amy,
welcome back.
Me. I was like looking ahead. Amy
okay.
Morris, I'm so sorry. It's the heat already. It's getting to me. And that actually...
It is the mid-80s. It's like 86
segue.
degrees outside right now here in New York.
This morning, I was like, you could feel the heat. It's the first time I didn't kind of throw a little coat. It's not going to be pretty. This is our one more thing, folks, about how hot it's going to be in New York City and across a big chunk of the country, especially kind of on the East Coast. We're talking about 60 million people who are kind of getting ready for some record-breaking heat.
Yeah, heat advisory will likely be posted Thursday, and temperatures may feel closer to 99 by then. We're talking about here in New York City, where Central Park is set to reach 98 degrees by Friday. You know, remember, summer doesn't even officially start until Thursday.
I know, we were just talking about the summer solstice off air. We get that later on this week. Scorching weather will also be spread into Canada. Montreal hitting 93, Toronto 91, according to Environment and Climate Change Canada. But we're talking about the heat going across New England being really, really warm.
The most intense heat is likely going to be felt across New England. In fact, the high in Concord, New Hampshire is set to reach 101 degrees on Thursday. Scorching weather, as you mentioned, also going into Canada, Montreal 93, Toronto 91. It's because of a large high pressure system building over the eastern U.S.
Exactly. So that's, get ready, folks. This is the beginning of summer, but we're talking West Virginia to Kansas, right? I mean, it's just even Iowa, Illinois, Missouri. It's a lot of heat.
Look, the reason we talk about this is because it has real effects on the health and safety of people who live in the area. Electricity consumption could go up. It could strain the grid in some of these cities with the air conditioners running. In addition to that, you have the folks who don't have access to air conditioning available, and it can seriously affect them.
Yeah, and the problem is, too, it doesn't necessarily cool off at night, and that's another part of the risk, is that they're not anticipating that we get any of that. So people are dealing with it really around the clock, if you will. All right, so happy Monday. Get ready, everybody, for intense heat. Coming up, though, for those who are watching on television, the close is coming your way in just a moment. For those who continue on Bloomberg Business Week, we're going to take a look at the markets because it looks like we're getting ready for the S&P to hit its 30th record of the year.
We're also continuing with our green theme today. We're talking to the VP of Global Policy at LinkedIn on the green skills gap. And Carol, we're going to need a bigger plane.
We're going to need a bigger plane. That's all the tease we're going to give you. We've got a fascinating thing that's going on. It has to do with wind power. We'll get into that. And then we've got Mo Rocca. He's going to talk about octogenarians.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
All right, everybody, we are just about 1 hour away from the closing bell on this Monday, June 17th. Carol Masser along with Tim Stenivek live in our Bloomberg Interactive Broker studio. Radio, YouTube, and Bloomberg Originals. We are across our platforms. We have a lot going on this Monday.
We do. I want to start with equities. The S&P 500 deep in the green, up 0.9%. The Dow up close to half a percentage point, while the Nasdaq is the outperformer, up 1.23%.
Looks like we're easily going to hit another record, but of course we still have 60 minutes to go. So you
a lot can happen in the next 60 minutes.
Bite my words. Also, we're going to continue with the green theme. We've got the Vice President of Global Policy at LinkedIn on the green skills gap. We're going to talk specifically what skills are needed in this ever-greening world.
All right, and you mentioned that we're going to need a bigger plane, Carol. Here's a little bit more of a tease, okay? There's a company out there looking to build the biggest plane in the world.
Yeah.
It's not Airbus.
No.
It's not Boeing.
Nope.
And it's all in the name of wind power. We talked to the CEO.
Wait till you see some of these pictures. Plus, we're going to be joined by Mo Rocca. He is actor, humorist, broadcaster, journalist. He's got another new book out, Octogenarians. These are folks in their 80s, 90s, late in life, creating some incredible stuff, having another career. It's a really fun, inspiring read. So we're looking forward to having him join us.
All that and more over the next 2 hours. First up, check on the day's trade and top business stories. Here's Charlie Pellet.
Very much indeed. Lots of green on Wall Street today. We've got the Dow, the S&P, NASDAQ all ripping higher. Final hour of trading, as Carol said, a lot can change in the next 59 minutes. But right now, we are trading in record territory. S&P up 0.9% higher by 49 points. Dow Industrials up 181 now, a gain of 0.5%. NASDAQ up 215 for the NASDAQ Composite Index, a gain there of 1.2%. Do not want to ignore both the NASDAQ 100 Index up 1.4% and the Russell 2000 Index of small cap shares. Right now, the Russell 2000 is up by 0.7%. And in the year-to-date category for NASDAQ, up now by 19.1%. 10-year, 4.27% with a 2-year yielding 4.57%. Spot gold retreating by 0.6%, 23.18 the ounce. And West Texas Intermediate crude up 2.5%, 80.39 a barrel. So a big question for investors is the next rate cuts from the Federal Reserve. More specifically, the timing. Kelsey Barrow is Executive Director at Fixed Income at J.P. Morgan Investment Management.
Well, I think they can wait. They're in a strong position as it stands today, but we do think that ultimately by September, they'll be able to cut. So enjoy the summer and look forward to when you get back from summer vacation, the Fed should have enough data to cut in September.
Kelsey Barrow of J.P. Morgan Investment Management. The activist investor Starboard Value, building a stake in Autodesk, valued at more than $500 million, does plan to push for change. Right now, we got Autodesk surging by 7%. Recapping, S&P up 49, gain there of 0.9%, 58 minutes to go. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Wait, was Charlie just telling us to take the month off?
I think he did.
Not the month off, the summer off,
Yeah.
basically?
Starts on the 21st.
Since in terms of Fed?
Yeah, let's do it.
The data points? Like
Nothing's going to happen
matter
this
till
summer.
September?
Nothing.
I'm
That's
just
fine.
telling you. Hey, this is what we're hearing.
Everything's higher today. It's so hard for me to find decliners. I'm complaining. I see Abigail Doolittle just nodding her head in agreement right now. She's with us right now. She's a Bloomberg News Chief Markets Correspondent. Abigail, come on in and talk a little bit about what you see. We're going to talk about some individual movers and some themes that you're seeing, but talk about today's trade because it's not every day you see 0.9% higher on the S&P 500 and 1% outperformance on the NASDAQ.
Agreed. There's some real strength here for stocks. A little bit surprising also given the fact that we started off with a very small move to the downside. Now, it is a weak volume move, so the buyers aren't they don't have a ton of conviction, but it's coming from big tech. You have Apple rallying in a significant way, up 2.7%. However, I will say, because of the conversation we've had, until it goes above 220 is very much likely to drop back down into that range. If it goes above 220, then it tells you people are buying it ahead of that iPhone event in September, and you could really see it just fly significantly.
It's almost there.
It is, but it's such a strong line in the sand for Apple.
Yeah.
And when you put the fundamentals into it, the single-digit growth, and you put the sky-high valuation, it's going to be really interesting to see what happens here. But we also have Microsoft higher. We have Avago up, or Broadcom, I should say, up for a 7th day in a row, another record high. AI, Tesla, Meta, NVIDIA. So you really have all of the big tech names. But the thing that's coming to,
No, I was going to say, it's always so interesting because, we'll have so many guests on in terms of investing in the market. They're like, oh, they've had their run. You really need to broaden out. Like, and yet we still consider.
We still have this strength.
Yeah.
And it's interesting. I think that a piece of it is that the earnings season, it's amazing because we're about to go into the big tech earnings season. We're like 6 weeks away from those names coming out again. But it was solid. There was solid growth out of these names. We didn't have any, at least to my memory, we didn't have any real big blow-ups. This really raises a big question, though, which is, so you have big tech going higher. If I take a look at the S&P 500 sectors on the year, tech up 31%, communication services is up 24%. That's your Googles and some of those other names. And then the next best name is up less than 10%. And so there's not a lot of good breadth. The advanced decliner lines is declining, which tells you there's more decliners than advancers. The RSI is trying to fix that bearish divergence we've talked about with stocks going higher on less bad momentum, but it hasn't quite happened. So the internals of this market, the breadth is not good.
That is so striking. You made me go and pull up the S&P 500 year to date, those 11 major industry groups.
It's interesting, right?
Oh my God,
Yes.
the outperformance among those big tech names,
Yes.
and as you said, communication services, those areas, everything else just pales in comparison.
Yes.
Like, it's pretty shocking.
It is. And utilities, which is the third best, up 8%. That is shocking for one reason. Well, for two reasons. It's a defensive sector, so you have the growth sectors, the top two, and then you have a defensive sector 3. But the real reason it's shocking is with yields higher, that sector should be down. Those dividends should not look good. But of course, it goes to the AI play because people are saying that AI is going to take. So all these eggs are in one basket. It's called AI. If AI continues to pan out, it's going to be fine. The thing that I would say is at some point, NVIDIA is not going to put up the monster quarter or the monster guide. That could be when, the music stops and people scramble for chairs.
Yeah, or revaluation at least.
Yeah.
Okay, well, speaking of reevaluation, there are a couple calls out from banks and individuals at banks that I wanted to talk about. Evercore ISI's Julian Emanuel, his S&P 500 year-end forecast, ratcheting it up to 6,000. It's the highest among his peers. You got Goldman out, raising its call on the S&P 500 to 5,600, which, by the way, we're very close to at this point.
Yes.
This is all by the end of the year. What do you make of this?
So, the Evercore ISI 6,000 call is interesting only because his last target had been 4,750. So it's almost capitulation. He's just sort of throwing in
below where we started, close to below where they started the year, right?
Yes. I mean, it's the other thing is though I believe he was on Bloomberg Television this morning, and he does great work. But I think in that segment he was talking about liking cash and bonds. So here he has the sky high stock target, but also liking cash and bonds. It doesn't entirely, all that doesn't entirely make sense.
How do you square that?
I don't know. I wish I could interview him. It is sort of tough. I mean, in terms of the target for the S&P 500, it's based on AI, big tech, the economy doing okay, valuation not being at bubble levels. We might not be at tech bubble levels, but valuation is stretched. It's 22 times forward. That's, much higher than the average, which is probably, I don't know the exact, but let's call it closer to 18. I took a look at the S&P 500 technicals this morning on a monthly basis. The index is more than 100% above its 200-month moving average. That's a fancy way of saying the index is really far out above its skis. The last time that it was well above was the GFC, but that was only 67%. But it's interesting, if we go back to the tech bubble, more than 200%. So we're kind of in between the last two big bubbles. And the truth is, things can go much farther and much longer. The music can keep playing until there's a real reason for it to stop. At the end of the day, though, I think it does come down to the Fed. And one thing I would add is a lot of the real estate conversations I'm having, because that's something that I've picked up in my coverage. So I'm talking to a lot of the folks at banks, regional banks, the real estate development company, investment companies. They're saying conversations about the presidential election are really starting to come into play. A little bit of sidelining there, that there's so much uncertainty in terms of what that means. We're not seeing any of that. At least in stocks.
At least in big tech. I feel like that's a great setup for our next guest because we're going to talk a little bit about, like, I feel like the election outcome, geopolitics in general, like this is increasingly coming up when it comes to uncertainties about the market outlook. Abigail, thank you so much. Abigail Doolittle, she's Bloomberg News Chief Markets Correspondent right here in our Bloomberg Interactive Brokers studio.
Okay, so that's a look at the equity trade. Now to sort of the economic outlook after a big week last week where we heard from the Fed. We also have this week, Carol, a half dozen Fed speakers between tomorrow and Friday. We got retail sales, industrial production. Let's bring in Francis Donald, Global Chief Economist at Manulife Investment Management, joining us this afternoon from Montreal. I mentioned some of the stuff going on this week. The big news next week is PCE, but before we get there, just give us an idea for how you're looking at the economic environment right now post-Fed.
We are looking at it very closely. We're actually in the middle of our quarterly forecast revisions. And when we look at the Fed's forecast, it's almost like they didn't see how much better that inflation print was on Wednesday. And it's almost as if the Fed's outlook feels stale. Thursday, we got another indication that inflation is progressing, to use the Fed's language. And then on Friday, we had import prices, which demonstrated again that there's disinflationary pressure in the economy. That's good news. And we expect that combined with, unfortunately, a deterioration in unemployment ahead, by September, the Fed will have what it needs to cut.
Is there something smart, though, in maybe waiting for PCE and just really kind of getting some more certainty, if you will, Francis, when it comes to the inflation print? I mean, and making sure, I mean, the Fed doesn't want to be behind the curve, but it also, we know, doesn't want to do things too early. I know some would say it's already behind the curve, but something to making sure that, okay, CPI, PPI, check, but just to really kind of wait maybe for next week and just, I don't know, if the reports that they get before July. I mean, I don't know. It's interesting. We had a guest before that Charlie Pellet was talking about that maybe you could go away for the summer. Nothing's gonna really come to life for the Fed until September.
Yeah, that's exactly how we're looking at it. We're not talking about, does the Fed have enough to cut in July? We're just talking about, were we really in an inflation scare for the first quarter when those numbers were too hot? Was that a trend that was going to persist through year end? And what we've seen in the last month is some evidence that actually, no, tightening does work. It does help bring down that year over year number. We're not just going to wait for the PCE. We have 3 more inflation prints, 3 more job prints, 3 more retail prints, actually maybe even 4 by September. And that's why just about everyone has agreed the Fed is in a holding period until that September number comes. But here's a little trick, actually. We don't really need to wait for PCE to come through because we can map CPI, PPI, and import prices really closely. That's why PCE numbers are not really market movers, because they don't tend to surprise to the upside or the downside. We have the calculation. We're going to see that PCE continues to decline in the right direction. But you're right. We've just gone through the largest price level shock in most people's lives. The Fed is going to want to be absolutely sure. And I think they're going to have to see some deterioration in the job market. It's just that our forecast includes this deterioration in the job market. That's why we feel comfortable with a base case for September.
Francis, how close to 2% are we going to get on PCE by the end of the year?
Probably not as close as the Fed wants. We're kind of believers that we're not going to get back to 2% for the next several years, that we're going to float between 2 and 2.5% on a structural basis. One of the reasons is that inflation is just not as interest rate sensitive as it has been for many of our careers, certainly for the past several decades. The Fed's going to have to contend with that. We call it a critical concession. Already we're seeing this globally. We've had the Bank of Canada, we've had the ECB, we'll have likely some more central banks this week that will cut with inflation above 2%. And that's not atypical. Central banks tend to cut on the way down towards 2, not waiting until they arrive. But it's an indication as well that they don't want to sacrifice jobs, they don't want to create a recession just to reach a 2%, which might not be reachable.
I'm glad you used the R word. I mean, can we assume that we don't hit a recession anytime soon? I mean, it's kind of remarkable where we are and the maneuvering that we've seen by the U.S. Central Bank, that we still have a strong job market, although some might debate that as well. But are you, in your modeling, anticipating a recession anywhere in the next 6 to 12 months?
We do have 2 quarters of negative GDP in our outlook. We didn't impose that. We're not trying to make a big opinion that a recession is coming for the U.S., but we see a slowdown in the consumer driven by, it's simple, Econ 101, higher interest rates. Remember, it takes 2 years for for that first rate hike to work its way through the economy completely. And we're just 2 years and a little bit past that first rate hike. So we believe that the impact of rate cuts isn't behind us, it's in front of us. And so recession risk is being underappreciated by markets. At the same time, they're two shallow negative GDP prints. If we were disagreeing between 1 and 1.5, no one would really make a fuss of that. It's just that when you talk about two negative GDP prints, suddenly it makes it like there's this huge binary outcome, recession versus non-recession. We're just talking about a slowdown in growth, which the Fed wants.
Francis, I can't tell what your dog wants. They want to slow down, or I'm just kidding.
Exactly. I think he has strong opinions and a really big fan of Bloomberg Radio. Joined us today.
It's okay.
You know what? He can come on, or she can come on anytime.
I mean, Carol,
Lovely to hear.
it's bringing back memories of you working from home during the pandemic when Scout would join the show a little bit.
Scout was very loud on the show. It's really interesting, Francis. I mean, I keep wondering, there's still a lot of liquidity out there in the market. So I do wonder, are we still kind of working? I mean, I think we are still working, right? That liquidity through the system. And so we're not really still quite sure what the true picture is of our economy post-pandemic. Is that fair?
Oh, it's completely fair. And that's one of the big challenges with forecasting right now is we're still grappling with that pro-cyclical government spending and what's the path for that ahead. We're still grappling with what exactly are consumers going to spend on and pull back in. We know that their consumption basket has changed. We're grappling with, are there excess savings left? We don't really have a good measurement for that. We know that wealthy individuals have more. We know there's less now than a year ago. But the entire profession, I'm actually writing my mid-year outlook right now, is grappling with how forecasting has changed, how what's happened in the past few years to change our biases. For example, should we cut later and allow more disinflation in the economy? There is no such thing as a sure thing. Even as the Fed's Harker today, I saw the quotes across Bloomberg. It could be one cut, he said, or it could be 0 or 2. And I thought, well, it's pretty honest and exactly how the rest of us are thinking right now.
Hey, data dependent, Carol. We hear it over and over again. Francis, 30 seconds. Speaking of the data, just give us your view on the job market right now, at least here in the U.S. Because we are getting some confusing signs that yes, things are slowing down, but then we had the May payrolls report just blow everything out of the water.
The payrolls did, but the household employment, if you ask households, is actually much worse. Consumer confidence is doing really poorly. For me, the big question has been, when is everyone going to stop talking about normalizing and start talking about weakening of the labor market? And I think we're actually on that cusp right now. Just about every labor market indicator is back to just about before COVID, back to what they would call normal levels. But economies don't come halfway down the hill and then stop. They have momentum behind them.
Right.
So right now, in level terms, we're doing just fine. It's not a labor market to be afraid of. But if we continue to see this deterioration in job openings, quit levels, hiring rates, it's going to flow into non-farm payrolls. And we're not going to be talking about normalizing of the job market. We're going to be talking about a softening of the job market that's more concerning.
Well, that's why I ask you 10 seconds. You got to be quick. So when we do start to see things turn differently for the job market, is it a slow turn or is it happen rapidly? Very quickly, if you could.
It's never slow, Carol. It's exponential. We can only hope that it doesn't go to levels as we've seen in the past.
All right, such good stuff. What's your dog's name?
Louie.
Louie?
Love Louie.
All right. Listen, great to have both of you with us. Francis Donald is Global Chief Economist at Manulife Investment Management, joining us from Montreal. You are listening and watching Bloomberg Business Week. Coming up next, we're talking green jobs.
Street. We do check markets all day long here at Bloomberg. We got 39 minutes to go ahead of the closing bell. The Dow, the S&P, NASDAQ solidly in the green. S&P set to close with its 30th record this year, but many analysts do remain concerned about narrow market breadth. Right now, though, we got the S&P at 54.86, up 55, up by 1%. NASDAQ also on track for a record, up another 236 points, up 1.3%. The Russell 2000 index of small cap shares also gaining today, up 0.7%. The Dow up 208, up 0.5%. 10-year 4.27% with a 2-year 4.76%. Spot gold down 0.6%, 23.19 the ounce. West Texas Intermediate crude up 2.7%, 80.55 a barrel. So stocks heading toward records as big tech rallies despite a jump in Treasury yields, with traders gearing up for a reading on retail sales and a slew of Federal Reserve speakers. As for the Fed and the market outlook, Christina Hooper is Chief Global Market Strategist at Invesco.
We're doing everything that historically has resulted in a reduction in inflation. So I think that's going to happen this time around. But there will be certainly data points that disappoint. But when we take a step back and look at the trend, I think we'll get to a place where the Fed is able to cut probably 2 times this year.
Apple is shutting down its Pay Later program, which let customers make purchases on an installment plan, marking a retreat from efforts to offer more financial services in-house. That based on reporting from our Mark Gurman. Apple shares, they're gaining now by 2.9%. Recapping S&P at a record, as is NASDAQ, S&P up 1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, Carol, we chatted about it a bit earlier with Will Wade, how Bill Gates has said he's prepared to plow billions of dollars into a next-gen nuclear power plant project in Wyoming. That's to meet growing U.S. electricity needs. Carbon-free nuclear power increasingly seen as a key part of fighting climate change, and more companies are promoting smaller reactors.
Yeah, absolutely. And so it's interesting, and it really got us thinking a little bit more about what we need in terms of the labor market to support it. And so that kind of gets us to our next guest, who says there's a skills gap when it comes to driving the transition to net zero. With us is Sue Duke.
She's Vice President of Global Public Policy and Economic Graph at LinkedIn. She joins us from Dublin, Ireland tonight. LinkedIn's members generate about 5 million updates each second, according to the company, and the Economic Graph draws insights from those updates. Sue, good to have you with us. How are you?
I'm good. It's great to be here. Thank you for having me.
Yeah, thanks for joining us. Hey, we're going to get to green jobs in just a second, but because you're at LinkedIn and you have all this data, we got to ask you about the greater jobs market, especially here in the United States. What does your data tell you about how the job market is here in the U.S. right now?
We have, as you know, over the past couple of years, seen a slowdown in hiring across a lot of sectors. That slowdown was coming off the back of the hiring frenzy that we saw over the course of the pandemic. But over the past couple of months, we have started to see some improvements in that slowdown, particularly in some key sectors like retail and real estate.
Interesting. Okay. Are there certain sectors that you're seeing right now that are particularly strong?
Sectors like that we are seeing some improvement in, and a key area where we're seeing high demand is when it comes to these green skills and these green jobs. There we see hiring in this space outpacing general hiring by up to 44%. So this is an area of real strength across the board in the U.S.
Well, Sue, you know, it was interesting on our planning call with our producer and team. One of the things, like, we started talking, like, what is a green job? What exactly is a green job? And what are the particular skills that are needed for a green job? Love for you to kind of dig a little bit deeper into that.
Yeah, it's a great question. A green job is a job whose core focus is combating climate change. So think of jobs like energy engineer, solar panel installer, wind turbine technician. And of course, to do one of these green jobs, you need lots of green skills. They're skills that are either preserving natural resources or taking pollution out of the environment. And what's really interesting is that we see these green skills, of course, showing up and powering those green jobs, but they're also showing up in a whole range of traditional jobs like data scientist, fleet manager, healthcare worker, jobs that aren't traditionally thought of as green jobs per se, but jobs that are going green all the time.
You argue that there is a skills gap between what is needed and what's available right now. What do the data tell you about what people don't have in terms of qualifications for these jobs?
That's right. What today's research from LinkedIn shows very clearly is that Gen Z, a generation that's most concerned about climate change, is the generation that's least prepared to fight climate change in their careers. Today, only 1 in 20 Gen Z has a green skill, and that means that they are not set up to take advantage of the opportunities that this transition presents and go and work in these roles, both those green roles and those roles that are starting to go green all the time.
You know, it's interesting. I always think about go back a few years when a lot of the big tech companies were worried about coders and not having the right job, right workers for what they were going to need. And so they were tapping not just colleges, but high schools to make sure that they had a pipeline of workers for what they needed. Where are we seeing kind of private, public sector, or what kind of collaborations are we seeing within the green industry to make sure that they've got the workers they need?
We're not seeing enough training. We're not seeing enough collaboration. We're not seeing enough of those partnerships. Fully 4 in 5 of these Gen Z workers are telling us, I would love to get a job in this space, but I don't know where to go to get that training and break into those roles. And you're exactly right. It's exactly those kind of partnerships across government and across the private sector that we need to see scaled much more, rolled out at a much faster rate than what we're seeing right now if we're going to get to grips with this skills mismatch that we see across the board.
You know, I'm going back to like what you said earlier about a solar panel installer. And, we have talked here at Bloomberg about people within the construction industry or home market, if you will, whether it's a plumber, electrician, like they're just not enough out there in terms of meeting demand. And I do also wonder that there's kind of a view of a lot of the younger generation are like, I don't want to do that. That's not what I want to do. And I do also wonder in these green jobs, how many maybe are wanting to do something to protect the climate, but they don't necessarily want a lot of these jobs.
What our research is telling us loud and clear is that these young workers, they want these jobs, they want to get into these roles, but currently there is this skills mismatch and there is this awareness mismatch, which means they're struggling to break into them. And their roles right across the board, including the roles that you're talking about there. And one of the key things that we need to focus on is that for some of these roles, for example, to get from being a general installer to a solar panel installer, as you say,